Today is the first day of the third quarter following the worst first half of the year since 1970. Futures are down across the board. The Dow off its lows. The futures lower by 119 at the moment. Joining me now, Portfolio Wealth Advisors President and Chief Investment Officer Lee Munson. Lee, your reaction to what these markets did so far this year, and it's not just stocks. I mentioned this, the investment grade bond index. This is an ETF, the U.S. aggregate bond index, down 11% year to date. The NASDAQ down almost 30%. This bond index, though, that's the worst start to the year for bonds in history.
Well, it is. And, already, though, in the last, couple weeks, we've seen the 10-year go down, 50 basis points. Here's the big elephant in the room. Here's everything we're going to talk about for the next 3 months is going to be about earnings revisions, right? Because if we're going to have such a deep recession going into next year, why are analysts not moving down their estimates? And I'm not talking about Carvana or Snapchat or this unprofitable stuff where you have a kid in his 20s that's caught in a deer in a headlight. I'm talking about the rest of, industrials, on banks. All that stuff has not come down. And I think the reason why it's going to be a tough quarter is because this market is not going to move forward until we look in the rearview mirror and see that inflation has peaked, or similarly, the Fed says we're going to pivot. So we're all waiting for this next shoe to drop, but where are the pre-announcements, right? Where are all these CEOs or analysts saying things are going to get bad? We're not seeing that yet. And that's, it's creepy, and it's making people like me a little anxious.
You were mentioning earnings season. So the quarterly earnings season kicks off with the big banks in a couple of weeks. And on that note, I want to bring Liz Peek in here. Liz, if my memory serves, you covered financials when you worked on Wall Street, did you not?
Actually, I covered oil field companies, Dagan, but I have lots of relatives in the financial services business, so I do have a foot in that camp too. I think the good news, and I'd be interested in your view on this, is whether the big banks it seems to me they're in pretty good shape. They passed their stress tests, et cetera, and they do not seem particularly vulnerable to whatever kind of blow up we're seeing in crypto or that we're yet to see. Do you agree with that?
Lee?
I completely agree with that. I think that banks, whether you want to buy a Bank of America, whether you want to buy a JP Morgan, I mean like Goldman Sachs, I think you've got 50% upside over the next 12 to 18 months. You can't time this stuff. It's not a chart. The big banks, you're not buying for a 5 or 10% pop here. But I think if you ever want to have a second chance at banks like you did the summer of 2020, this is your time. And I think you can commit capital here.
What would you avoid like the plague?
Well, anything that's young, unprofitable, and sort of that millennial trade, because I think those are not going to come back. I mean, come on, DoorDash, I love the service, but every time I use them, they lose money. You look at, Uber or Lyft or, Casper mattresses, everything, we've been subsidizing millennials here for many, many years to the tune of billions and billions of dollars a year on these companies that have just lost money. So there's a difference between buying a Disney, down almost 50% with a future, or a Bank of America with a future of earnings rising versus a Carvana, or, it's just, does nobody remember what happened 22 years ago? The companies that couldn't make money never came back. And a lot of the companies that did came back strong. It's very simple.
Right. I have a Casper mattress story. Speaking of which, I like the mattress they delivered was made wrong. It wasn't a queen and it wasn't a king, and it was a nightmare trying to get it picked up, and then they just threw it away. Like they didn't. I know, they sent me this mattress, gave me, and it was made wrong, and then they just threw it in the garbage. I went, this is not a good money making business.
Every mattress you buy, they lose money on, right? And that's what we're going through right now. So you got to separate that stuff out, because again, that's going to be a problem, because a lot of the analysts that covers those type of stocks, those are going to be your younger, more inexperienced people who, like .com, they never bring them down. And so I think that the banks are everything you need to see, because the banks are real companies run by adults. Say what you will, but that's going to be your tell for the second half of the year.
Lee Munson, have a great weekend. Thank you so much.
Thank you.